There are now more brokerage accounts in crypto than there are in traditional markets. And this is not an investment, we run a portfolio. This is people's entire life savings and their future hopes and dreams.
Yeah.
We've never seen anything like this. So the way at which people become kind of cult heroes within that community, people were crying when CZ was on stage.
Yeah.
Right, so this is a movement much bigger than most people understand. People who are in traditional financial markets, they don't get this, but this is a much bigger thing because people have been gifted an asset that goes up 150% a year. It changes everybody's lives.
Crypto has been surging at an incredible pace, climbing roughly 150% a year and outpacing every other market on the planet, turning small investments into life-changing fortunes. That's the latest insight from Raoul Pal, CEO of Real Vision, who says crypto now boasts more brokerage accounts than traditional markets, proving just how mainstream digital assets have become. Platforms like Binance and Coinbase are onboarding millions of first-time investors, many of whom are bypassing stocks entirely and treating crypto as their primary savings vehicle. Adoption is exploding worldwide, especially in places like Nigeria and the Philippines, where limited access to traditional banking makes digital assets the clear alternative. Over the past decade, Bitcoin and Ethereum have averaged triple-digit yearly gains, making crypto one of the fastest wealth-building opportunities in modern financial history. Stick around until the end, as Raoul Pal reveals why this wave of adoption could open the door to once-in-a-lifetime opportunities for investors.
The other thing, you sit on any panel and you realize the sheer amount of intellectual capital in this space. It is unlike anything I've seen. You know, yes, when I was at Goldman, there's some really incredibly smart people.
Sure.
This space is just littered with them. Whether they're technologists, finance people, creatives, dreamers, just you name it, they're all there. And that's magic. When you get capital, intellect, and then this community of passionate people, that's what this is about. That's the signal here, is like, you know, people can have opinions about crypto, people can think about stuff, but this is real. And, you know, this is the one in Dubai, and there's 15,000 people at Toga 2049. Yeah. Singapore is going to be 25 to 30,000 people. To explain the exponential age, it's this extreme exponential adoption of these technologies, whether it's AI, whether it's crypto, whether it's EV, whether it's robotics, whether it's space, all of these things. And they are all on a log return. So they're exponential. If you look at price charts. So that is the game we're playing. Those exponential assets, if you think of Amazon stock, back in the early 2000s, it fell 97%, it went up 600%, it fell 50%, you know, they're volatile.
Yeah.
So they're volatile assets, but if you can hold on to them, the returns are truly extraordinary. This is why Jeff Bezos is the richest man in the world, or close to it. And, you know, it's all the same thing.
Introducing the all-new Ledger Flex. Your next level crypto wallet is here. Sleek, premium, powerful. The Ledger Flex delivers a solid high-end feel with smooth edges for a more comfortable grip, and that satisfying nostalgic sound you didn't know you missed. Still clicking away in your old Nano S? It's time to upgrade and lock in your crypto gains with style this bull run. Smooth, modern design built for serious profit. Click the link below to grab your exclusive Ledger Flex. Ditch the rest, go Ledger Flex.
So that is the mega trend. That's the exponential age. Within it, you have the business cycle and the liquidity cycle that drives this. So what you find is you need to understand where you are in that cycle. That cycle is driven by liquidity flows, let's say. And recently we had liquidity tightening from a strong dollar and higher rates in Q4 2024. That has a 12-week lead into assets. So assets fell because liquidity had tightened then. Liquidity has been doing the opposite now. It's been easing massively. And so price should follow. But the volatility is big, right? People don't realize is, you know, you're used to a 10% being a correction in the S&P, and anything above 20% is a bear market. 20% is an afternoon in crypto because it's highly volatile. It's a 70 vol asset versus a 15 vol asset. So it's much more volatile. So the idea is you need to be able to understand how to navigate the volatility. So what we call the banana zone, what is that? That's the accelerated point in the cycle where prices go exponential. It's usually at the latter point of the business cycle. And that's the kind of zone we started. We had the big leg up Q4 last year. we've had a corrective period, and then usually we now should go up for the rest of the year in a way that makes it quite hard to even buy, with a couple of sharp corrections en route just to gut check everything.
Yeah. With the unknowns that'll come in through.
So now we've established that we're in this exponential trend that is driven by the business cycle. It's a 4-year cycle driven by the debt refi cycle. We're in the last year of that, which is usually one of the best parts of the entire cycle. It is going to be volatile throughout that period. So then my job is trying to communicate to people, okay, if you've been given the greatest performing asset of all time, then you don't want to screw it up.
Yeah.
And it's hard because most people aren't used to volatility. It becomes emotion. And emotion doesn't help you in this. It'll force you to do the wrong things. So I try and explain to people, firstly, don't use leverage. It always looks great because you see some guy on Twitter who's made 100x returns and he's done it perps and he's done it. It's like, it's never going to happen. You are going to lose your money. Because rule number 1 is don't lose control of your tokens. Because really, you want to hold it from here and you want to be Jeff Bezos here, right? And he didn't lose control of his equity. You don't lose control of your tokens. So that's really vital. It's also, don't FOMO, because you'll find out you'll end up buying at peaks and selling at troughs. That's the emotional side of things. Also expect 30 to 40% pullbacks often and think of them as normal. And if you've got cash, that's when you buy more stuff. So it's like having this mentality. It's also be careful not to lose your tokens because you get hacked. So store them on a ledger system somewhere.
Yeah.
Keep a cold wallet. Just simple things like that will stop you losing your tokens, stop you, even you FOMOing in fear, selling out, panicking, or bull market buying too much. If you don't do that, you'll lose control of your tokens. Again, just don't lose your tokens.
The basics.
And just hold it from here, and in 5 years' time, it'll be here, and in 10 years' time, it'll be here. And people don't believe that's possible, but this is the gift that keeps on giving it. It's the same with NASDAQ.
Yeah.
Right? Tomorrow will be more digital than today. It's a simple fact. So will tech stocks over time do well? And everyone goes, yeah, but they crashed in 2000.
Right.
Okay, well, we had a massive bubble in tech stocks then. You pay back for a year or two, but anything you bought into that crash was Amazon, Google, Apple, all of these things did stunningly well. So people just have the fear of what's happened in the past. But we know this tech adoption curve is not going to stop. In fact, it's increasing. So the probability is, even if you have a bear market, which we had in 2022, it lasted 1 year, 9 months. 9 months, it bottomed out with liquidity, and it's been up.
Raoul Pal describes crypto and the broader exponential age as a rare convergence of capital, talent, and technology. He sees some of the brightest minds from finance, tech, and creative industries pouring into groundbreaking innovations like AI, blockchain, robotics, and even space exploration. These assets move at lightning speed, with volatility that can easily shake out inexperienced investors. But for those who can weather the swings, the long-term rewards could be extraordinary, similar to buying Amazon or Google in the early 2000s after the dot-com crash. Pal's advice is simple. Avoid leverage, secure your tokens, and embrace volatility as part of the journey. In this cycle, he believes patience is the key that can unlock truly life-changing returns.
People want to be traders. They think the way to make money in financial markets is to trade all day. Yeah, it's great for your business because you make fees. It's great. It's terrible for them because I literally don't know of the world's great investors. Paul Tudor Jones is a pretty good short-term trader. Stevie Cohen's a pretty good short-term trader. Other than that,
right,
the people who are good short-term traders build systems to do it.
Yeah.
Renaissance Capital, people like that. Most of the people actually made money from long-term structured bets.
Yeah.
Stan Druckenmiller, George Soros, all of these guys. They were not trading all day.
No. And leverage.
Day traders. I mean, there's virtually not a day trader I've ever met that's made money apart from unless you're a market maker in the floor of Chicago.
Right.
And that's a different job.
Yeah, that's also a different edge that you have going.
Yeah, and it wasn't that many people who made a lot of money doing that either. People who make good money, but the really good pit traders, very, very few.
Yeah.
Top 1%. I'm the wrong person to talk to about diversification. because I've run large diversified portfolios, big hedge fund portfolios with many, many positions. And what I found is, since I kind of discovered that everything code thesis about liquidity being the dominant driver, I realized there's one macro driver that drives everything. And then on top of it is the adoption of technology, whether it's crypto or tech. Those are the two megatrends. Nothing else outperforms the debasement of currency, which is 8% a year plus 3% inflation. So 11% a year is what you need to do to break even on your savings. And so you've only got two assets to do it, technology and crypto. And when I divide the NASDAQ by Bitcoin, it's down 99.97% since 2012. On every time horizon, it's underperformed. But they're driven by the same factor. 97.5% of the price moves of the NASDAQ are explained by global liquidity and 90% of Bitcoin. Yet the performance is so wildly different. So I don't even know any tech stocks. Yes, I have trade recommendations for people who do, etc. I don't know those. So now you've got the world of crypto. So then if they're all being driven by the same thing, what you want to choose is the fastest horse. Now that's not buying the meme coin that can go up 100x. What you're trying to do is look for what are meaningful projects being run by meaningful people with meaningful communities. So is this Metcalfe's law idea, how many active users do they have? What kind of value are they creating?
The utility, if you will.
Yeah, well, it's the measurement of the entire utility of the network. Do people value the network? Do they want to build on it? Do they want to transact on it? Do they want to own it? And so there's not that many that really show this. You've seen some of the communities like Cardano has a huge amount of retail users, almost no applications. Bitcoin has both at scale. Ethereum has both at scale. Solana is earlier in the network adoption model, but it's got it at scale. Sui, arguably, very early, looks like it might get it. So then I played the dumb idiot. I kind of have a thesis in my head, and I'm just like, what does the chart look like? And so you start with the chart of Bitcoin, that's your benchmark. Is the asset that you think is the greatest asset ever conceived, the one that you want to own, is it outperforming Bitcoin or not? 99% of all tokens don't. Okay, don't own them. But once you find the one that looks like it will, okay, now it's interesting. And that's what I had. That's why I switched from Bitcoin to Ethereum in the last cycle, then from Ethereum to Solana this cycle. Solana outperformed Bitcoin and outperformed Ethereum. And then halfway through this cycle, I realized the other horse in the race was going to be Sui, which was the ex-Facebook team built a blockchain, and I happened to be on the board of it, but it wasn't for that. It's because it was breaking out versus Solana, which was easily the strongest horse. I'm like, okay, this is the strongest horse squared. This is my bet.
Nice, interesting.
And so I'm pragmatic, because as you say, we don't know what will survive and what will do well. So I'm just pragmatically looking at kind of weekly chart time horizons.
Performance quite a bit.
Is it breaking properly? Have I got something to capture in understanding how it's going to move going forwards? I'm not interested in day by day stuff. Is it structurally looking like it's going to outperform? If it is, I'm going to hyper concentrate, because then I don't have to worry about anything else. It's a weird thing. Even Stan Druckenmiller would say this, is like, you know what? Don't have many eggs in your basket, because it's much easier to watch.
Raoul Pal warns that most people who attempt day trading end up losing. Constant trading may enrich brokers through fees, but it rarely creates lasting wealth. History shows that the greatest investors, like George Soros and Stanley Druckenmiller, built fortunes by making long-term, concentrated bets, not by chasing quick wins. Pal believes that nearly all asset prices are ultimately driven by two forces: global liquidity and technology adoption. In his view, crypto and breakthrough technologies are the fastest horses in this race, offering the greatest potential for outsized returns. Rather than scattering capital across hundreds of tokens or stocks, he advises focusing on projects with real-world utility, strong communities, and a track record of consistently outperforming Bitcoin. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.